What else we got on the docket?
We got Michael Saylor.
Oh yeah.
And it's gonna be awesome.
Oh god. Poor Mike.
Really? Really? I think you're a fan of personal responsibility.
Well, I also don't know.
I like his conviction.
Yeah.
He might be the one guy who gets it right.
I think from everything that I'm reading, they're not gonna. It doesn't seem like they're slowing down the Bitcoin thing.
Oh man. I don't want to say it, but man, blank is a hell of a drug.
Uh-huh.
No. Don't.
I don't want to
cast
say
aspersions.
I'm not casting aspersions, but manic behavior is manic. Bitcoin is a hell of a drug.
Is it?
That was the word
behavior,
I was
though?
saying.
He seems very consistent.
Bitcoin, because Bitcoin is a hell. Oh, look at Rachel. Well done, Rachel. Well done. Look
right
at
there. Boom. I've been taking a Greyhound. Now, see, it's just. Bum, 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 bum.
By the way, Michael Saylor has been CEO of MicroStrategy since for over 30 years, stepping down.
Yeah.
Guys, in things that are absolutely bananas, and every single time I look at Twitter, I'm just like, pew, crazy ass rabbit hole is the Alex Jones.
I
trial.
have not gone down that one.
I mean, it's not even a rabbit hole. It's like you literally look at it for 1 nanosecond and you see that, oh, he literally went up and tried to pretend to shake hands with parents and then confronted them and said they were being lied to with
Honestly,
crazy videos.
if I meet that guy, it might go down.
Oh, Jesus.
And
I'm just letting you know.
His the lawyer for the parents revealed that Alex Jones,
because he would start yelling in my face,
sent him the contents of Alex Jones' phone by mistake. Like the Sandy Hook parents' lawyer is like, 12 days ago, your attorneys messed up and sent me a digital copy of every text you have sent for years. Do you know what perjury is? Like, it just, not only is he awful and he's the worst and whatever, but it just gets more and more insane. The trial is
wait a second.
Insane.
They sent Alex Jones's
lawyers accidentally sent the Sandy Hook parents' lawyers years worth of texts revealing the financials behind info. So like the bombshell drop today is like, oh, hey, P.S. we have all your texts because your lawyer is so incompetent that they accidentally sent it. So you've perjured yourself. What's going on with the
incompetent lawyers? First, it was like Amber Heard's lawyer seemed completely incompetent. And then I guess people can't afford great counsel. Like Donald Trump
doesn't want to work with them.
Oh yeah, fair point. So you got like Donald Trump, Amber Heard, and Alex Jones all have these like crazy lawyers. It's really a weird pattern. I'm not casting aspersions on any of them, but it is a little weird.
It's not that
the out of context quotes from the someone was tweeting just like text-based out of context on purpose quotes from the trial, and it was like Alex Jones, I guess, has like some throat problem, so he can't like speak properly. He has larynx and he's coughing, and like one of the quotes was like, the judge was like, "Mr. Jones, please don't throw. I don't need to see the inside of your throat, Mr. Jones. I don't need to see the inside of your throat, Mr. Jones."
Oh my god.
That's like an actual.
That's quote. That's a really out of context quote.
Yeah. It was so funny.
Is he the most horrible human being on the planet?
No, most horrible. Oh my god.
That's a big hill to climb. I mean, he's pretty horrible.
I'm trying to think of like what could be worse. I mean, aside from outright murdering of people, actual violence.
There's like a whole other pantheon of horrible people that
sure,
he has to ascend to.
But to target parents who've lost their children who were murdered, for your entertainment and profit, allegedly.
Yeah, horrific.
It sounds like if I said come up with the worst thing you can do other than killing children and murdering people, that would be like next on the list. Well, I can't kill them.
High up there, yeah.
So, but I could torture their parents for years.
It's like one of the worst things you could legally do.
Yes. Right? Okay. Sure. That's actually the benchmark. Yes.
Within the bounds of the law. Yeah. It's one of the worst.
Within the bounds of the law, what could you do that would be super gnarly and horrible? Oh. like this, I'm glad he got kicked off all the platforms because, yeah, like that really goes to like, well, we just don't want to be involved in that. Like,
Dude.
forget about freedom of speech, whatever. Like, I understand, like, there's a line where I guess he could talk about conspiracy theories and it would be legal. I guess.
This is they just let him sit there and lie for 12 days, and today is the day that they're hitting him with all the texts and emails that they were accidentally sent. They're literally springing it on him like in real time right this second.
Wow.
Like, hey, remember 2 days ago when you were under oath and you said this? Oh, here's the emails that you accidentally sent us. That, like,
what?
They're just
And-
nailing this guy's ass to the wall right now.
Yeah,
This is amazing.
big ass too.
A
A lot of nails.
Ew. Nailing Alex
You might need a
Jones'
nail gun
big
for
ass
that.
to the wall.
We get him a nail gun. That's a taxidermy
All right.
situation, is what that
Hey,
is.
Home Depot, I broke another nail gun.
Oh my
Alex
God.
I'm
Jones.
gonna need
ass?
some anchors.
That's the third one today.
Also, if you are in our chat saying Alex Jones is right, you're gonna want to rethink being in our chat.
Yeah.
Full stop.
Alex
full
Jones
stop.
is right.
There's like
Oh
two
my
of them.
God,
There
is
are
there
two of
really?
them. There was one person
Right
who was like,
about
he
what?
also nailed a lot of stuff, and I don't want to. I do not want to hear it.
I mean, okay, here's the thing. If you were to talk for 5 hours a day on a live stream and then
if you were to be a
selectively clip it,
stopped clock,
yes, you would be Prof G or Alex Jones. You're going to get something right at some point. One of your predictions will come right.
I can't believe you were literally quoted in that story about Prop G. That was
Oh
amazing.
God. I was just like, they were like, do you want to call it a
That
Prof G? I was like,
amazing.
I mean, what haven't I said already?
I'm like, they asked me to co-host for him one day. Jason's out here picking fights on Twitter, calling him not a builder. I was like, do you hate me?
No, I actually,
No, I was laughing at you. I was like, they
didn't
already
he was-
know.
honestly,
already
I did not know he was building stuff currently. I thought he was just a commentator right now. I guess he is building something like a virtual MBA school, which I did kind of remember. Somebody put $30 million into it or something.
Yeah. I don't
We
know.
covered
But I
it.
did know he did Red Envelope because I remember
Mhm.
covering that story.
I remember Red Envelope, actually.
I remember Red
using
Envelope.
it.
I was like, this is a fucking dope idea.
It was
Because
cool.
when I was a journalist, I was like, oh yeah, go to a website and has all like cool GIFs. Like, how often do you struggle with GIFs? And now I was like, oh, I wonder if the Red Envelope domain is available. That would be a sick troll to if I relaunch Red Envelope. And I looked and it redirects to GIFs or something, gifs.com. But that was a dope business. And then I looked it up and he got in it went public. It was a disaster. And there was like a whole back and forth with him that I wasn't even aware of, or I kind of remember my periphery. But I thought that idea should have worked. So,
Mhm.
but yeah,
It's sold,
congratulations.
right? It
to-
got acquired. It didn't like.
it was a disaster. I think it's like, it was literally like what's happening to Peloton right now is kind of what happened to Red Envelope. It was like, it got like a lot of hype and then it just collapsed down to nothing.
Freaking Peloton gonna go on sale, for God's sake. When are you gonna start dumping inventory, Peloton? I'm so
know.
cheap. I'm just such a
I'm-
cheapster.
I'm thinking about buying Peloton stock. I don't want to make a J trade right now, but I have been thinking about that.
Maybe think about that a little longer.
Well, I have to. That's for people who are helping with the J trading. I would like to get somebody's feedback on that because the J trading it's pretty strong. I think we got our first sponsor for J trading. So this is gonna
Dude,
become
people
a
love
little
the
bit-
J trade.
I like doing a good J trade. I feel like I'm
Mhm.
learning, and having skin in the game really makes you
Great
learn
content.
faster. Yeah.
Mhm.
Well, it's good content, but I think about everything in terms of learning. Like this show is a proxy for me getting smarter
Mhm.
every day, and you all get to come along for the ride in the noties. Give us a thumbs up.
Thanks for joining us.
Thanks for joining us, everybody. Okay, we got a lot to go.
All right,
through.
let's do it. Yeah, we got a
we
week.
had to do an interview before this with
If
one
you
of our
want, you could actually
investors.
start with the intro because we have everything basically lined up in order. And we
Let's
might-
do
yeah.
it. Make it
is that
easier
a
to
good
edit.
idea? Okay.
If
sure.
you want, you don't
It's
have
up
to.
yeah, I'm okay with that. If we don't think it's going to change, or we
Whatever.
could go on tangents.
Which we probably, I don't know.
We usually go on tangents, but
All right, so don't do it.
yeah, let's not do it. Okay, here we go.
Wait. Sorry. Quick times restarted.
Yep,
Mine
10:03:04.
is at 12 minutes. I think maybe starting with Y Combinator
Okay.
is the biggest. Is that the biggest news for startups this week?
It went a little underreported, I thought.
Yes, which I think is
So all the more reason, yeah.
Yeah.
Okay, let's start with
Yeah,
that
that's a
one.
good
Sorry.
startup
Hold on,
start.
I'm moving
I like
up to
that.
the top.
Oh God.
It's
Oh,
like-
come
Oh,
on.
you're
I
moving
just
it.
got
Okay.
to it. Oh, geez. Oh,
Okay,
peanuts.
never mind.
Sorry. Now it's on the
That's
top.
okay. It's great. Thank you.
Talking like you're from
That's-
Fargo.
Oh my gosh.
Oh my gosh.
Oh, you just went right ahead and moved
Don't
it, didn't ya?
know? Don't you know?
Don't
It's
ya
at the
know?
top. Don't you know?
Oh,
here we go.
for
In
fun,
3,
kids.
2. All right. Welcome to the show, everybody. Molly, I saw some news in our group chat that Y Combinator is decreasing the number of startups in its summer 2022 accelerator by 40% from its winter batch, which had 414 startups participating. Take us through this story, which Kate Clark reported in the information.
Which, of course, she did because she's
Yeah.
amazing at this. Yeah, apparently the summer 2022 batch only includes about 250 startups. When asked about the future sizes, YC head of comms Lindsay Amos said, quote, every aspect of our batch and the environment in which the companies will be operating to determine the batch size. That feels like a
little bit
sentence
of a,
fragment there. YC said the reduction in batch size was due to the macroeconomic downturn, changes in the venture funding environment, and then, of course, YC going back to in person. And Y Combinator has been making more changes to its program lately. Remember, they recently changed the standard deal actually from 125,000 to 500,000. And the information article notes that in June, YC CEO Michael Siebel said that the outfit had the budget to fund 1,400 startups under the new standard deal, meaning, you know, by back of the envelope math, they've got $700 million to work with. So, like, what does this actually mean? Are they cutting the batch size because they're putting in more money?
no. I think
Okay.
what this means is that
Also, that's a lot.
it,
We have
yeah,
what, 7?
Well, I only like to do some because I like to get to know the companies. I
Yeah.
never aspired to do like this, like sort of factory farming version of startups because for me it's much more personal, right? And so, and you know, they've got 200 or 300 people working there to do this kind of scale, and I think it's great that it exists in the ecosystem. Now,
That's a lot. But yes.
the challenge with this is, it dilutes the brand to have this many companies go through it a bit, and that's caused, I wouldn't say reputation damage, but I do think people look at YC much differently than they did in the early Paul Graham days when it was, let's say 30 companies. It felt more bespoke. It felt like, if you were going, each of the companies really did have to fight to get in there. And now it feels like, well, they're just getting an option on every company, and at the valuation they pay, which is $2 million, there's no reason not to take that option. So I always say, listen, if Harvard is such a good school, why aren't there 10 Harvards around the world? Why don't they replicate it? And that is what Y Combinator did. They went from these 20, 30, 40 batch sizes to 400. So they 10x'd it. So I give them credit for that because that means more people get to experience their program, which is good. They get the Y Combinator stamp. Then the counter argument people would have is, okay, I just, what being a Y Combinator company meant 10 years ago is just different than what it means now.
Right. It's not that exclusive. If you're,
yes.
how many cohorts are there a year? Do we know?
I think they do too, winter and summer.
They do too. So you got like 800, you had over 800 companies just woof.
It clearly
Which
got
is still
way
pretty,
too big. Way too big.
Right. I mean, 800 out of every single possible startup all year long is still probably a relatively small number, but it's not, it certainly doesn't feel like wildly exclusive at that point. So it sounds like they got too big, maybe unmanageable. And then when they raised the minimum investment, it got more expensive.
Well, the way it works is you get the 125 for 7%. And then I think they put the other 375 in at whatever your terms are when you graduate, which by the way, is what I created, 7 years ago with the launch accelerator. So they got that idea from me. And it's a great idea to give myself credit for it, because a lot of times when you graduate, giving them more money, helps grow the company, and you can get your 7% to maybe get up to 10% ownership. And I think that's what they saw. They had very little ownership in Airbnb or Dropbox or a lot of those great companies by the end. And, the way you win in this game is by continuing to invest. So I think they did everything right in that regard. But maybe they're looking at it saying, well, will we be able to raise another $1 billion fund and keep up this pace, right? Because if they were going at this pace and they had the budget to fund 1,400 startups under the new standard deal, if you're going through 400 or 500 per class, that means they have 2 more classes to go or 3 more classes to go. And here, if they go down to 200, they got 7 classes to go. So this could be a recognition also of maybe they would not be able to raise as big of a fund in the market in the current conditions. It's possible.
Yeah.
It could also be that maybe less people, Molly, are starting companies. So if less people are starting companies, then maybe they're saying, well, this is going to, if we try to hit a certain number, which, would be crazy if the quality goes down. So maybe they're saying, hey, we're not finding 400 people that hit the benchmark we're looking for a YC company. So let's go down to accepting half as many. So if you got half as many applications, you'd have to lower your standards. Just like Harvard might be, right? Have to lower their standards if they went 10x. NYC went 10x. So, maybe they don't want to lower it. Or it could be when they graduate, the other theory I had was if they graduate, they have a hard time raising money. So then they've just got all these orphans, and then they all come back to them like, hey, there isn't enough VC infrastructure to absorb all the YC companies.
Right. That is what I wondered, is what does this say about any potential weakness that, there has been this prevailing theory, and TechCrunch even notes investors have argued that pre-seed and seed stage startups are, immune in some ways to macroeconomic tensions because it's so removed from late stage valuations. But it does, I've been asking you over and over about this like growth, like what comes next thing. And it does sound like it's not different funds, like people just invest at different amounts and they change how much they're investing. But is there the valley of death?
Yes.
If you send so many baby turtles, like I say all the time, that our job's kind of like sending baby turtles toward the ocean, and we know a lot of them aren't going to make it. But it sounds like there's a lot more birds in the air right now.
Well, or a longer trip to the ocean.
Or a longer trip to the ocean, right?
That's actually the issue. Is I think a lot of investors are slowing down their investment pace. You're seeing this in the meetings we're having, where people came to us 6 months ago. It was closing. We had to get on the train. The train was leaving the station, and then the train never left the station. They came back to us and said, hey, we didn't close. We made some cuts, and now we're, the business looks a lot different. We raised our prices. We cut our costs. So we doubled our prices. We cut our staff in half. And all of a sudden we're only burning 25K a month instead of 100. It's like, oh, well, that business looks totally different. Maybe we would want to invest in that business since it's not burning through, 1.2 million a year with 10K in revenue or whatever it is. So, I think a lot of those changes take a while for people to change their approach to running their business. And as we talked about just yesterday with Uber turning the dials, great segment. Uber had to make that change. That was a multi-year change. Then we talked about that matrix we made, the 4x4 and the 16 quadrant matrix of like, how much runway do you have? How profitable are you? This is all part of the same theme, which is unwinding what the strategies were in growth to what the strategies are in a bootstrapping environment. We're in a bootstrapping environment right now. Yeah. And I think a lot of founders and a lot of VCs were operating in a, cynically reckless fashion, entitled fashion. Reckless and entitled would be, how you would describe the worst of it. VCs were being reckless with how they were investing and the diligence they were doing, the bets they were placing. And and some VCs were acting super entitled, thinking they would just blow through a fund in 12 months and everything will go up and to the right. They didn't have to be thoughtful. And then founders too. We're being reckless with the dollars and entitled with the dollars. Hey, I'm always going to get my next round. The never-ending bridge round is over. Like, I know people who've raised 2-3 bridges, and each time, like, I'm just going to do another bridge for $1 million. And it's like, and it's going to go up. So like, what would be the incentive then to be profitable, Molly? Well, now all the realities here, this reminds me very much of the time when I invested in Uber and Thumbtack, where you had 4 or 5 people in your company. You tried to get to 10, 20K in revenue, and you didn't really get distracted with anything but your product and your customers, right? And so this ultimately will be a good thing for the market. And it seems like a very wise decision for Y Combinator to hunker down, and maybe they lay off, half the Y Combinator team or a third of the team if they don't need that many people to do 400, That would be the next shoe to drop would be.
Wow, you think? Yeah.
If you're not going to be doing as many deals, you may not need as many people. Now, if you had all those deals backed up, I'm sure you could, if you have all the management fees there, you could redeploy folks to work on the existing portfolio. So I'm not saying that that's a likelihood, but this is the painful stuff. And I think one of our angel investments, Robinhood, is dealing with something similar, which
Yep.
is, when you're reducing your workforce, how do you do that? How do you do it effectively? How do you do it wisely?
Yeah, I mean, I think what we're clearly seeing is, and this is a perfect segue to the Robinhood story, is that no one is immune, right? Like Y Combinator is not immune. We probably aren't. I don't think we have anything to announce about our programs, but it's everybody's in a reaction mode. And yes, news came out yesterday, I think, last evening, that Robinhood was laying off something like 20%, 23% of its employees as retail trading slows. Remember back in April, Robinhood cut 9% of staff. The 2 rounds in total have cut more than 1,000 jobs from the company. And Bill Gurley had an interesting tweet about layoffs, which he euphemistically calls reduction in force, RIF.
Well, there's a technical thing here. A RIF and a layoff are 2 different things. A layoff means you're intending to bring the employees back. So we're laying you off. Markets have changed. Well,
Really?
That's technically my understanding of it. Yeah, I didn't know it either, but since people are using RIF is like you're not coming back, and layoffs can become RIFs. So that's why people use this term RIF, because you're reducing the workforce permanently because market conditions have been so severe.
I did not know that. That is fascinating. All right, well then let's go.
I didn't know it
RIFs.
either. I literally typed into Google RIF versus layoff because I hear one group, I think the elder statesmen, kind of call them RIFs because they've been through this before. It's like, these people are not coming back. There's also the term furlough.
Furlough is like you definitely could just be brought back. Layoff, it seems like the position might continue to exist, even though you personally might not come back. But a reduction of force seems to be, I'm looking up on Indeed.
Yeah.
Is like
furlough is temporary.
The position's gone.
Yeah. Furlough is like, if I said, listen, and I did see this happen to the .com. Let's say Y Combinator said, hey, listen, we need to cut costs by 15%. We're going to furlough everybody for 3 weeks in the summer, 3 weeks over the holidays. You're not going to get paid for 6 weeks.
Right.
So, that's just the nature of this. So your salary is going down by, approximately 13%. And, people who work in unions or they work in Hollywood, it's basically unpaid vacation. And you know what? It's kind of cool. Sometimes people really like that furlough better than a reduction in force, a RIF. So if I were to say to our team, hey, listen, we've got to make up this, whatever, everybody's going to have their salaries reduced by whatever, 5%, but you're going to get that time off. People would be like, am I going to leave the job? Or do I want to get more time off?
Right.
Like if I'm thinking about it, I'm like, can we do that? It sounds good to me. I'd like to spend more days. But fuck it. I mean, if I went to everybody in my company,
you're just gonna furlough yourself. Like
I like to be furloughed. I'll take a furlough. I mean, I think a lot of people, if you said we're gonna take listen, this economy sucks. It's brutal. We're taking Fridays off. Everybody's taking a 20% pay cut, but Fridays off. Not counting your vacation days. Like, I mean, literally every Friday, it's like,
it's not a hard no.
We could take 2 shows on Thursday. Bank an interview. Summer
Friday. Finally.
If I did if I did this as a vote and I said, listen, there's 10 Fridays. We work 250 days a year, whatever it is, 260 days a year. 10 is whatever that is, 1%. No, 10 is 3%. Everybody 3% pay cut or every Friday off this summer. What do you take? I know where that vote's going.
Totally. Although honestly, in this company,
everybody would just work anyway.
Yeah. Everybody would still work Fridays. So maybe not. But yeah, you're right. I looked it up on Indeed. Reduction in force, employee termination. When a business decides it has no further need for the position, a layoff is considered temporary. If there are budgetary changes, they can lay off the employee, but the company still needs the position. So the position may continue to exist in the HR hierarchy, even though you, the person who got laid off, might not be the one who gets hired to fill it in the future. Fascinating. All right. So Bill Gurley, as usual, by the way, with the precision.
I just want to make one little note here. This is all very important for founders to understand when they get to call it hundreds of employees. The reason is there are very local acts One of them is called the WARN Act, Worker Adjustment and Retaining Notification Act. This is for
Right.
any employer, if, nonprofit, public, private, whatever. You got to give 60 days notice of RIFs. And there are tons of nuances, but it's just important to understand that you have to give notice. Now, for tech companies, they've been so generous with severance of 60 days, 100, people give 6 months sometimes, like, so it doesn't apply. But I remember back in the day, there were some companies during the dot-com era that crashed so quickly that the WARN Act and other things were brought up because they had only given 4 weeks. It used to be in the industry, you gave 6 weeks of severance, and people were like, man, screw these tech employees, 6 weeks severance, I only got 2. And then, the cash in our industry was so great in these war chests that people started giving absurd 6 month severance for employees who could be hired the next day.
Actually, the Robinhood severance says people can stay on until October 1st. So I'm assuming that's probably WARN Act related.
Or, one way to do these is you can, okay, there's another one. That's a little bit weird. You can tell people, we're going to get rid of your position. You're going to get 1 week of severance for every year of service. I think that's like that's what typical industries do.
Pretty standard, yeah.
Pretty standard. So you worked here for 3 years, you get 3 weeks of severance, or you can work your job for the next 3 months. So you can pick, but if you do work the 3 months, you get 12 weeks, but you don't get 3 weeks of severance on top of that. So for businesses that are actually not like, have tens of billions of dollars or billions of dollars in cash laying around, that's typically how they do layoffs, is they'll give you the choice. Now it could lead to weird because now you got people in the factory who are losing their jobs and you get this like 12-week goodbye. That's a little weird.
A little awkward. Yeah. I'm surprised too that
nice
Robinhood,
to say goodbye. Yeah.
I'm a little surprised that Robinhood is keeping people on through October 1st, only because my sense of kind of like when you have reductions in force in an industry like finance, that usually it's sort of sensitive enough that people are like out the door.
Yeah, it could be. You do always have this, like, is somebody going to throw a wrench into the machinery? And that's why most HR people go with the, you're no longer working at this company, effective immediately. And when you go back to your desk, like, your email is not going to be turned on, just because you really don't want an employee to make a rash decision. That's not so much to protect the company, I think, because the company usually is going to be fine. It's actually kind of to protect the employee. You don't want somebody to, go digitally postal where they, decide to tweet from the corporate account something, and then you got to sue them, or they take a client list.
Start insider trading like crazy, right? Trading, like they're just front running trade. I mean, it's sort of like, that's a very interesting choice to me in this specific case. Cause like, but also,
disclosure, I was an angel in Robinhood. I still own my shares.
Yeah, exactly. I'm not trying to put you on the spot here.
No, I just want to make sure people, I don't have any inside information. The last time I talked to Vlad, I believe, was when he was on the podcast and All In during the whole GameStop stuff.
Ooh. Yeah, Stan Hope is saying Molly's dead right. No financial company has people work out their severance. So maybe they're in different roles. I don't really know.
Could be different roles. Yeah, it could be.
It's also... And then Bill Gurley's note about this.
Okay, back to Bill Gurley's note.
Back to Bill Gurley's note. He said, if you're planning an RIF, a reduction in force, and haven't executed yet, please see this as a lesson. Robinhood did 9% in April and now 23%. 5 to 10% RIFs are all of the pain and none of the gain, and are frequently followed by a 20 to 30% RIF later. If you're going to do it, try to do it only once. So he was saying Robinhood should have cut deeper sooner.
Yes. I mean, it's good advice from, Obi-Wan. He's been around for a while. Venture Obi-Wan, AKA Bill Gurley, is right, and the more I get to know him, or, I'm friends with him, and the more I see him actively talking about the stuff, the more respect I have for him. It's a hard thing to do, though. I've been there.
Exactly.
When I did my first layoffs, I did 3. When I did my second one, I did 1. And it's just hard to take the medicine because, you're a founder, you optimize and you self-select for hope, and believing you can get out of it. And I believed I could, get out of the tailspin, and I couldn't, and the problem is you don't want the tailspin to get really, really, really bad and everybody dies. In this case, everybody dying is a metaphor for losing their jobs, not actual death. So,
But yeah, I mean, you can 100% empathize with, Bill Gurley is basically saying like, suck it up and take your medicine if you haven't already. And but you can also
Hard.
100% empathize with the idea that you want to believe that things are going to get better or aren't as bad as they think. Robinhood CEO Vlad Tenev wrote in a blog post saying the previous layoffs did not go far enough in helping cut costs. He also said, quote, the reality is that we overhired, in particular in some of our support functions. And then Robinhood also moved its Q2 result up a day earlier than scheduled. Revenue was $318 million, down 44% year over year. Ouch. Net loss $295 million. That was $200 million less than it lost in Q2 2021. Right. And monthly active users, and this is that real, number in terms of slowing growth, we're down 34% year over year.
Which makes sense. They had gotten to 21 million, I think was the peak, if I remember correctly. Now they're at 14 million. You got to think 25% of people, 50% of people who were involved in stock or crypto trading over the boom years would take a break. And maybe it's not for them, right?
Right.
And so or
they're gonna
Peloton users, or I think Match had a tough time with the reopening and dating is changing. So these are the swings. Now, what will happen is I'll be J trading. Robinhood will become a sponsor of J trading, hopefully. And since I'm using it to do my J trading.
You're going to single-handedly keep it alive.
And we'll just have $1 million.
Volume.
Yeah, monthly actors will go up $1 million a year as I J trade with J trading.
Is this SBF's moment, by the way? Is this when Sam Bankman-Fried is going to swoop in and buy it?
What's the market cap right now? I guess that's I don't know the most recent market cap.
Yeah.
But they do have like
close 6 billion, 9.1.
9.1 billion, 6 billion. I don't know if they have debt. So that's always something to look at. Remember, I was looking at Snap and I found it very attractive because of the 5 billion in cash. And then somebody DM'd me and was like, check the debt. And they had like 5 billion in debt or 4 or 5 billion in debt. And I was like, wait a second. So the cash they have is debt they drew down. It's like, yep. It's like, oh, okay. I'm learning something about J trading. There's the valuation. There's the cash on hand. And I was doing my little fun math. Okay, it's worth 9 billion. They got 6 billion. So the enterprise value is 3 billion with 14 million folks. Well, I don't know what the debt is at Robinhood. So I take you got to take the debt out of the cash because they got to pay that back.
Right,
so anyway,
totally. I'm looking. I don't see anything at the.
Yeah, it looks like no discernible debt on their earnings.
No discernible
debt
that we can see.
The brilliance of the Robinhood team. They cashed themselves up when they could. When you can get cash in the bank and sit on it, like Apple, Google, Amazon, everybody who's got this cash laying around, you don't have what's called the risk of ruin. And bankroll management is one of the keys to being a great gambler. You have to know how. This is one of the reasons I haven't really gotten hurt playing in high stakes pokers, because I have an idea of what my bankroll is. I set goals for myself, and I become more cognizant of it. I have other rich friends who maybe are less cognizant of it, and I at times have been less cognizant of it because the money doesn't matter to me. But it's big numbers when you're playing in big cash games, and you do need to be eyes wide open, and you shouldn't play in games where you have what's called the risk of ruin. So if your net worth was $100,000 and I was playing in poker games where I saw people buy in for $100,000, like their entire net worth was on the table. So they could have the best hand on the flop or even on the turn, and then the other person has one out. So somebody's got a set of aces, they have 3 aces, the other person has a set of kings, and you got all your money in good, and then that person hit the king on the river, and now you've lost your entire net worth. Now, if you were playing with 10% of your net worth, the chances of that happening, what's called the case king, the final king in the deck, it's a 2% chance of that happening. Well, you can survive it because you have the other 90K, right? You played perfectly. You want to be in that situation. You're a 98% favorite. Great. But you do have to watch out for the risk of ruin. And like companies like Peloton and BuzzFeed, as we've been looking at them as potential J trades, do have the risk of ruin because they could run out of cash.
Yeah.
And that's really the danger. And that's one of the reasons why I'm still long Robinhood. I didn't sell my shares. I might buy more shares. I think they're a brilliant product, brilliant team, still the best product in the market. And I think they will get bought potentially. Hopefully they can defend themselves against getting bought and keep building this for 10 years. That's my hope.
I mean, $6 billion in cash is a really big moat, as you've been saying. The stock is up over 13% today as a result of the reduction in force news. Investors do like that kind of discipline. So You might have missed your chance to get a deal on the J trade.
I mean, I have some already, but I think it's a good J trade actually.
Yep.
I may, and this is not investment advice, but and I have a position.
I feel
Maybe I'll
like
increase
that
my
is always
position.
like, that's followed by picking up the phone. No, I don't want to peer pressure you.
Hold on a second.
Just think it through. Think it
Hold
through.
on a second. I gotta, hold on. The J trades are brought to you by these $3 readers on Amazon.
For those of you who are not
Glasses
watching
on.
the video, glasses on means
I mean, come on,
dimes
man. Have you guys used Robinhood? They're
about
just
to be
trolling
dropped.
me. I think they reduced I think Vlad reduced the font in Robinhood this week just to troll me. I mean, you have to be, I think like you have to be a bird of prey basically to read the font size in. I mean, my Lord, look at my J trading. I am
Glasses on
crushing my J
equals
trading.
dimes
Did I call
are
the
dropping.
Nick, point of privilege. Did I call the bottom? When I said bouncing along the bottom, did I call it? Let's pull some clips. We need to
pull some clips while I put
it's,
my-
you know, it's hard to say if that was the bottom, but
It was a bottom.
it was a bottom.
Tell you what.
It was a bottom.
Yep.
I think the you being perhaps the only person in the public markets that actually made money off of Stitch Fix is probably a good signal of that.
mean,
Yes, you might.
I'm an idiot.
Bottom.
Can I just for a minute send you my? I'm just sending you my day trades.
This is
to pull
not
out my J
investment
trades.
advice, but if you're up on that, just sell.
Yeah.
Can you just pull up my? It's not investment advice. But we should pull up my J trades. Just a point of privilege here. Total
God, bird
return,
of
total
prey is
percentage change, total percent change is for today, and total percent change.
Right, and I shouldn't say you made money on Stitch Fix. You're currently up money
Correct.
on your Stitch Fix.
I have percent change,
So
and then I
that
have
made any
total
money on
percent
Stitch Fix.
change. Okay, total percent change is pretty good here. Go take a look at my what I sent to the group chat, and we get just don't pull up my Doge. That's just,
Don't pull up my dough.
don't pull up my Doge trade. You're just asshole. I
I
don't want to influence people because I did buy
Wow,
Doge as
really?
a joke. Well, here's the
Look
thing.
at
I
that.
don't.
822. Oh, I'm just looking at your Stitch Fix. Damn.
Doge as a joke.
I did buy Doge as a joke.
Didn't
and I
everyone?
literally do not want to encourage people to buy crypto. Except I do think Bitcoin, I might buy some. Anyway, I just sent you my percentage.
Michael Saylor.
Shout out Michael Saylor. Can you pull? I'm sorry, I'm taking my grandpa glasses off. I didn't make a trade, but you can pull up my my four trades so far.
I'm cropping it now. So
Oh, great. Okay. Thanks.
yeah. Hold on a second.
So people can actually see the J trades to date. It's going okay. I'm 4 for 4. If I can make 3-4% every 2 weeks on my money, that means every what is that? Every 3 divided into 70, 72, 35. Yeah, I'm gonna be in good shape. I'm gonna be doubling my money every year on J trades. Look at this. Stitch Fix, 5,000 shares. I'm up $800. My Disney 250 shares. I'm up 1,300.
I like how you change the option from percentage up to like the raw dollar number. So
He's like, show me the dollars.
No, I want to show both. I'm trying to be intellectually honest. My Amazon 1,000 shares. I'm up $8,000. And my Warner Brothers, I'm already up 1,500. I bought that yesterday. So yeah, I made like what is this? 10, 15,
About,
20,
I don't know,
12,
14,
12K.
just under 15.
Yeah. Okay. Great. Well, I'm going. Let's just by next week I'll be able to pay for my private jet to Mexico City, and then you can show the percentages. Nick, do you have the percentage one too?
I don't.
I'll add you to the dinner reservation.
All right.
I'll just bump that
Anyway.
up by 1.
Thank you. Thank you. All right, here we go. Let's keep
All
moving.
right. Next
It's not
up,
investment advice.
Do you want
not
that
investment advice.
on the show?
Yeah,
Okay.
for sure. I mean, I want to be intellectually honest about what I'm doing with J trading. To be clear, what I'm doing with J trading is I want to become a world-class public market investor because that will give me the ability to understand private markets even better, the full life cycle of a company. Number 2, I want to make returns. I think this is a unique opportunity to make returns. So 1, I want to learn. 2, I want to make returns. 3, I think it's going to be entertaining for the audience and educational for the audience. So there's like a trifecta here. also it's a way for me to get some of these CEOs of these companies on the program. If I'm being totally honest, it's a fourth one,
4D
like-
chess. That was the 4.
Well,
and
I
the D.
mean, if I want to have, like, if I'm buying or not buying Snap, maybe Evan Spiegel will finally come on the program. Right? I think this is, I mean, why do people go on Jim Cramer? Mad money.
Yeah.
Well, he affects the stock price.
Right.
I think I'm going to impact stock prices because I
Okay.
think people are not because of who I am, Molly, but because of the thoroughness of the J trades, the intellectual honesty of the J trades.
Interesting.
Okay. I'm in. Let's go.
May trades.
I'm laughing at the idea of Evan Spiegel seeing you put like 10 grand into Snap and be like,
Just
I
being
guess I
like,
gotta go. on the
I gotta
podcast."
get
on
there. I gotta go.
The war room, the lights go up.
Exactly.
We got a J trade.
Woo, woo.
No,
Incoming.
It's not that. Nick,
His
you're not
new-
getting
his
it
new,
wrong.
Like chief of staff is like, Evan, Jason Calacanis just invested $10,000 in Snapchat. You have to go on the podcast.
No. It's worse. I didn't invest, and I explained my thesis. And if my thesis is wrong, management might want to explain to me what I'm missing. See, like, I might freely be missing something. You know,
Yeah, we don't know everything about the company.
we don't, and I think that's where management will want to discuss this stuff. And I'm not saying I'm going to I'm not making trades to get people on the show, but by making trades, people will want to come on the show more because I do think we will influence stock prices, not intentionally, but if we do a really thorough, if we do a really thorough job and we pick winners, like I want, if out of 10, I want at a minimum 7 of them to be great trades in that they're up. I want 7 out of 10 to be great trades. And when they're dogs and they're not working, I'm going to unwind those trades.
That seems to go against the whole point of the 10-year outlook, though, because you're going to have natural dogs just based on market fluctuations from great companies. Like you still think Disney's a great company, but if you bought it 6 months ago, you'd be like pulling your hair out right now under that view.
Right. And this is where, this is not investment advice, but if
Or
the
market
audience,
manipulation.
no, Nick or Molly,
We should probably consult like
I'm freaking out right now. I'm freaking out.
SEC
don't freak out.
lawyer
Here's
person
no, it's totally fine. I can answer this question.
I like
I am
that.
doing
I like
this to
how you're
educate
manifesting
myself.
that this
No,
is
it's totally fine.
okay.
It's totally
It's
fine. This is the issue. I want to be able to make mistakes and unwind trades based on new information. And if the Disney trade turns out to be a stupid trade, and we get additional information.
Well, Disney's clearly an amazing company, but it's been a stupid trade for 6 years now. Like it's it's crazy to me, honestly.
I guess it depends when you got in, when you got out. Like what happens if?
Right. I mean, you could have bought it in March of 2020, and you could.
I've been thinking about
want
this.
Nick to co-host the J Trade show because Nick
You
is
You don't want to be on
low-key
Low-key.
a high level financial analyst. I'm just saying.
That's the biggest.
He low
mistake.
key is.
I would love to get
Not
Nick in
true.
on J trading. I
Yes.
agree. If he started doing like puts and calls and he started fading my trades,
No,
and
that's
like
not
Right?
the world that I play in.
that'd be
You
hilarious.
say so.
What if
but
I
you're a
set you up with the
natural.
no, Nick? What if I set you up with the bankroll and gave you 20%?
Yeah, you floated this idea. I would rather not.
It'd be hilarious if I bankrolled Nick. See who does.
I'm just saying I would watch the hell out of this.
I
would watch
Nick
the
Bankroll.
hell out
I
of
promise
this.
you, a Nick Bankroll would have never made $822 on Stitch Fix. Never in a million years would I have done that. So kudos to you, Jason, because you are a braver man than I.
I just followed Bill Gurley into that trade.
That's
I was
true.
like, that is a thesis, a thesis that I want to pursue more of. Like, what are the insiders doing? Who's buying their own shares?
Oh wow! Now that I'm thinking about it, you followed Michael Burry and Bill Gurley into 2 trades, right?
Yes.
So that is 2 famous investors played by Kyle Chandler and Christian Bale. Do you know that?
Okay. I did.
Michael
know that.
Burry was played by Christian Bale in The Big Short. Bill
Yes.
Gurley played by Kyle Chandler in the.
Okay.
That's
So
interesting.
what is Christian Bale buying right now? Is he long Disney or short Disney?
But the only 2 investors you've tailed have been played by A-list Hollywood actors. I guess Kyle
Okay.
Chandler's probably.
So
different.
now this is the perfect example of J trading. We've double clicked on a theory,
Yeah.
which is, so now we have to work backwards. What other famous investor,
Have
was
been played
played
by actors. Yeah.
exactly.
Mm.
Mm-hmm.
And then what are they doing now?
And what are they doing now? Right. So if we
I
need,
can
if
think of
anybody,
one.
well, Leonardo
Yeah,
DiCaprio.
what's Jordan Belfort?
He
What's
what's Jordan
trading these
Belfort
days?
play?
Oh,
Yes.
Jordan Belfort is,
You trying to get into some penny
printing
stocks?
money right now, I think, actually.
What
He's
is he
like-
on?
Sell me
What-
this pen.
Somebody needs to tell me what the Wolf of Wall Street is doing.
He's doing
That was
real estate, I
actually-
think.
What is your favorite? Just as got to stay in the show. We'll go around the horn here. Your favorite Leonardo DiCaprio and Marty Scorsese collaboration? We got Wolf of Wall Street, Gangs of New York,
Aviator? I
Shutter
haven't seen that
Island,
one.
Aviator, Departed. What's your top two? Start with that. Top two. Wolf of Wall Street's definitely my top two.
Yeah, I'm gonna go Departed #1, Wolf of Wall Street #2. I
Okay.
love The Departed. It's like
Mine-
my favorite movie that I never want to watch again. 'cause it's
Mine's
so
the
upsetting.
reverse. Mine's the reverse. It's Wolf of Wall Street, then Departed.
What
But I have to
is-
watch Gangs of New York because Lon Harris told me I got to go, guys. Yeah, Nick, what is it for you?
Um,
Shutter Island's number 5, obviously. So it's kind of
I Gangs of New York is awesome just because Daniel Day-Lewis is insane as Billy the Butcher. But number one is no doubt Wolf of Wall Street, no doubt.
okay.
Because part of it is because of the story of how that movie got made, that it was by that what was it, the Malaysia Sovereign Wealth Fund. The guy like stole all the money, and he just basically gave Marty Scorsese an unlimited budget and said, literally go as crazy as you want.
Right,
that
and they
movie
did.
that's just Marty Scorsese going bananas, which is amazing.
It's pretty great.
Jordan Belfort, by the way, is currently touring the world as a motivational speaker, and at least as of 2021, had a whole bunch of NFTs.
I'm not following him down that path. Yeah, sorry. Leo train ends there. By the way, Nick, your great grandparents on your Irish side hail from the 5 Points in Manhattan.
Interesting.
Did you know that?
No, but I mean, like, I don't know. I feel like a lot of Irish hail from the 5 Points now.
Well, we originally were in Brooklyn and then to the 5 Points, then back to Brooklyn. It's basically Canal Street, Park Row, above City Hall.
Yeah, the neighborhood's destroyed now.
Civic
All the
Center.
streets that used to make up the 5 Points don't exist anymore. I think one of them might, but yeah, it's interesting.
It's, yep. Civic Center, basically, Chinatown, Mulberry Street. Yeah. All right, let's keep going on the show.
Enough of this nonsense.
Wait, who's your number 2 then? Gangs of New York or Departed?
They're both good. I don't know. They're both
Okay.
great movies. Hard
Alright.
to pick.
Well, they're doing a 6th one together on Netflix, by the way.
I'll go Gangs of New York just because there's so many stupid, annoying Boston accents in The Departed that just irritate me. Like Mark Wahlberg, that whole movie.
Yeah. He's the worst.
As your mother. It's like, all right,
As your
enough with the as your mother. All right.
I mean, what? I mean, he literally
Oh,
guy's
hey,
got one
chicken.
tagline. Prayers up. Prayers up.
Say hello to your mother for me.
The praying app. Get your prayers up. Does he have a hamburger joint? Wahlburgers.
Wahlburgers.
That's a
Right?
thing?
This is a TV show.
Wahlburger?
No, they're
No, I
opening
think it's a-
Wahlburgers in the Bay Area now.
I don't
Yeah,
know.
Has
it's
anybody
like a
had a
real thing.
Wahlburger?
Hold on. There's one in Vegas. Yeah, it's a real thing.
Wahlburgers is his franchisee. Is that public? And then what's going on? I want to maybe J trade.
All right. Are we
No,
gonna
you
get to the
don't.
rest
Give
of
it
the
to
news?
me.
No,
What's
you
going
don't.
on here?
Not
No.
Wahlburgers, but I want to trade. I may want to trade J trade Shake Shack. I'm putting it out there. I need some intelligence on Shake Shack.
Shout out Danny Meyer.
No, I mean Danny Meyer is a goat,
Legend.
and I think
Come
like,
on the pod. I've invited him so many times.
God, we got to get him on the pod.
Mr. Beast.
It's always something else
Wahlburgers.
with him. It's like, oh, Danny's, he's gallivanting somewhere. He's not
Yeah.
available for the next 3 months. I'm like, man, that guy's living life.
Oh man! All right, here we go.
Let's
Michael
talk about
Saylor.
Michael Saylor, shall we?
Is he still long Bitcoin?
Oh, yeah.
Bitcoin's a hell of a drug. Let's go.
Bitcoin is a hell of a drug. All right. So, Bitcoin enthusiast, Michael Saylor. I like how
Understatement of the year.
enthusiast is like
Cult
Exactly.
leader.
That's like, I'm an enthusiast about breathing.
Yeah. Oxygen enthusiast.
Big oxygen enthusiast Michael Saylor is anyway. Michael Saylor is stepping down
Oh.
as MicroStrategy CEO to become executive chairman.
Mhm.
Now, for context, Michael Saylor has been the CEO of MicroStrategy for 33 years.
Wow.
He started the company in 1989, took it public in 1998. He will now assume this role of executive chairman and remain the chairman of the board. There is an ongoing question about whether this is in fact related to Bitcoin, because MicroStrategy, of course, went from being like what is it, a chip company? I don't even know.
No, it was I think it was a SaaS company.
SaaS business intelligence company.
Business
Okay.
intelligence company.
So went from being a business intelligence company to basically a massive Hoover of Bitcoin. And at this exact moment, I think is down something like $900 million on Bitcoin. But
yes.
so the stock market, as you might imagine, is reacting pretty well to Michael Saylor stepping down as CEO. The stock is up about 13.5%.
Okay.
And MicroStrategy just released earnings, which
Yep.
were like fine for the software side of things. Revenue was $122.1 million, down 2.6% year over year. Gross profit was $97 million, because it is in fact still a very high margin software business.
Their actual business.
Their actual business, the
Their
regular
actual business, as opposed to their treasury business, which is holding Bitcoin,
one. Right.
which he frames, Molly, as a treasury business. But in reality, what he did with this was he took his, meandering software company. Obviously, it's been around for a long time, and it's not broken out to some crazy amount of revenue. It's still more money than any of my companies ever made. So congratulations.
Yep.
But it's barely a public company. Let's be honest. He then got all these loans, bought tons of Bitcoin, and essentially created an ETF, a shell company of Bitcoin, which I don't know how that's exactly legal, because I thought like they weren't doing Bitcoin ETFs or crypto ETFs, but he's
created an
treasury.
ETF so that you can invest in the MicroStrategy Bitcoin holdings?
Well, no, by taking MicroStrategy's, a shell company essentially.
I see. So if you invest in MicroStrategy, you're effectively investing in a Bitcoin ETF.
That's all you're doing by investing in MicroStrategy. Nobody's investing in MicroStrategy for the MicroStrategy business intelligence business.
Well, had $97 million in gross profit in Q2.
Okay, whatever. I mean, it's fine. I mean,
but yes,
it's no Google.
If you are in at this
Shout
point,
out to all the people at MicroStrategy staying focused on the actual business throughout all of this craziness.
Serious shout out.
Bless them.
No, but look, the stock was flatlined. Look, this is a dead patient.
It really was. Look at that.
This is the ambulance is driving, and they're like, you know what? We're gonna call it in the ambulance. Like, we can take our time. We could stop and get coffee. On the way to the emergency room, this patient is dead. It was flatlined.
Yep. No,
and then somewhere around 2020, he starts buying up Bitcoin. And 2021, this thing spikes up to $1,000 a share because people were buying it based on the price of Bitcoin. So if you were to take this chart that we're looking at of MicroStrategy's
earnings over the past or stock price over
stock
5 years.
price. Yeah. And if we did the market cap, would probably be even more illustrative of this. I'm sure the market cap parallels their Bitcoin holdings value.
Yep.
Because that's basically what you're buying is a bunch of Bitcoin, and they own a lot of Bitcoin.
Right. And so when we say a bunch of Bitcoin, here's what we mean, just as a reminder. As of June 30th, the company owned $2 billion in Bitcoin. That is 129,600 Bitcoins at an average price of $15,000. Wow, it's really down. The digital asset impairment charges reported in the Q2 earnings, basically how much they lost from Bitcoin, was about $918 million for the quarter. So lost almost $1 billion.
So yeah, listen, they were buying, I think, $40,000-$50,000 Bitcoins. So obviously when it went down to 17, there was all this talk about them getting liquidated. And I think the total number of Bitcoins will eventually be 21 million, right? That's all there are.
Million. Yeah, that's all there will ever be.
Correct. Now, there is a theory that a third of these are lost. So if it's really, let's say 15 million and he owns 129, he owns 1% of the active Bitcoins.
Yep.
Something like or less, much less. What does he own? Look at the percentage here. If there are 15 million Bitcoins, and 10% would be 1.5, right. 1% would be 150. So maybe he owns like almost 1% of active Bitcoin.
86 basis points.
Yeah. So I rounded up to maybe he owns 1%. We
Yeah.
don't know the number of dead Bitcoins. I think some people have tracked that because the original wallets own so much. And there is a theory, Molly, that Satoshi or the group of people who are Satoshi, the reason that those wallets never sold their coins is not because they don't want their coins. The coins never moved out of those wallets. It's because they lost them.
Mm-hmm.
So there might be this incredible embarrassment by the person who created Bitcoin, or they're just incredibly savvy that they don't want to uncloak themselves, even though they have, I don't know how many tens of billions of dollars.
Right.
Like what percentage of the original wallets own is like this big question. And then why have they never moved? My theory is they've never moved because people were just screwing around with the software and they never wrote down the passwords. Because they're like, well, this is just a project. And then all of a sudden they're sitting there going, oh my God, imagine if I came public and I had $30 billion or 40 billion in Bitcoin and I could never get to it. Oh my Lord.
Or they passed away, or right.
Oh
there's
yeah,
like
that's
a
the other
million
theory is that they could be
right? I
dead.
mean, they could
right?
have died. Yeah. Like
Or maybe
the
they
noties
gave
are
them-
like, ask anyone in LA. It's one guy and he's dead. Which
Okay.
extra jobs like DM us later.
I like the
What
I
is-
like the dead. I like the dead or government conspiracy. Like it's a government agency. It's a part of a
I mean, that's
conspiracy.
always just more
I
fun.
love that one.
So here's what's interesting is that Saylor, again, is remaining executive chairman. This does not appear to be what you might think at first blush, right? MicroStrategies loses $1 billion. This guy steps away as CEO, becomes executive chairman. Clearly, they're going to go in a different direction, right? However, the new CEO, Fong Lei, said, I would like to reinforce our commitment to our customers, shareholders, partners, and employees, and I look forward to leading the organization for the long-term health and growth of our enterprise software and Bitcoin acquisition strategies. And as executive chairman, Michael Saylor appears to actually just be freed from the pesky work of building any of the enterprise software, because he said on Twitter, in my next job, I intend to focus more on Bitcoin.
All right. We have to have Michael on.
this
We
is
have to
what
have
he's
Michael
gonna
on the
do.
program. He slid into my DMs.
Yeah.
So we'll have him on. Here's the thing. This is my prediction. They're going to sell off the SaaS business and then make this a Bitcoin holding company of some type, or he's going to move up to exec chair, because the person who is this new CEO, my understanding is he was president CFO and they got a new CFO. So Michael was explaining it on CNBC this morning. I happened to catch it, that now that they have a CFO and the president CFO can move up to CEO, president, whatever. So putting all that together, what I feel like is going on here is they are going to go on some sort of splitting this up or going into an M&A structure. So how would that work? Pretty simple. If they can make this an ETF essentially, or some sort of Bitcoin holding company where they buy crypto Bitcoin assets, like let's say there were tools or whatever in the Bitcoin space, he could start buying those, and then he could take this business and then sell it off and let it stand on its own and have its management team, et cetera.
Yeah.
So there's something corporate going on here. Usually there's this is the first card. The first card was getting a CFO. The second card was him moving up. There's going to be a third, fourth, fifth, sixth, seventh card. There's going to be 7 cards here. And I think we know 2 of them right now. So more cards to come, and we'll keep an eye on it. But he might wind up being like one of the smartest people in all of this crypto space, because Bitcoin is enduring. And, we sat here going, oh, it's going to go down to 5,000. And I was like, yeah, I don't know about that. But here we are. It's going back up again in the face of this crypto collapse. Molly, I don't know if you're watching, but it was up to like almost 23,000 the other day.
Oh, yeah. My baby Coinbase portfolio was up to like $600.
Oh, wow.
After a
You're
low
back
of
in again.
400.
So here you go. You're
Is real. My
your
Mo
May trade.
trades.
You may trade.
My
May trade.
My May trade.
May trade.
My May trades are killing it.
Yeah.
Speaking of trading, let's quickly talk about Airbnb estimates, if
Okay,
we may,
Yes.
or earnings rather, because we had an interesting conversation yesterday about Airbnb and its durability and its revenue moat. Like, what are the dials that it can turn? So Airbnb beat estimates for earnings and revenue. Shares were initially down as much as 9% in after hours trading on Tuesday, because it was like a beat, but kind of a narrow beat. Revenue actually slightly missed on estimates. The stock has recovered now to only being down 1.5% on Wednesday to a $72 billion market cap. Gross bookings, as you might imagine, were up 17%. up about $17 billion, up 27% year over year, because people are
That's
actually
great
going
growth.
places again.
Yeah.
That's phenomenal.
Yeah. High growth.
Revenue, though, did slightly miss. It was, I mean, I hate to say it slightly missed because it was up 58%
Yeah,
to $2.1 billion. Like, why do we even, the miss thing is
well,
just
I don't
such a
care about these
weird-
estimates. Like,
I
I
don't
just
give a
care, like, I can make my own
doodle.
decision. Who
Right.
cares about the analyst estimates?
I know.
It was up 58% year over year.
58%.
Yum, yum.
That's
Do you want us to
great.
stop including analyst estimates in these?
I don't know. It's just, what's the point? I mean,
It usually helps some context to like, okay,
When you see the
revenue's
stock
up
drop.
70%, and it's like, why is the stock down? It's like, oh, because
Right.
it's supposed to be. Up
I think it's great to
70%.
actually include it and keep pointing out how stupid it is. Because
Yeah.
it's stupid. It's
I
so
mean-
stupid. Like, if my revenue was up 58% year over year, I'd be fucking stoked. Pardon my
and
language.
the miss, like slightly missed, like who cares? Anyway, yes, I understand it does. People base their trades on what the analysts are expecting, but I don't understand this tradition.
This
I
is
mean,
why
I like to make
Apple-
my own decision.
I think stopped. Anyway,
Anyway,
what?
guidance,
So a
yeah.
couple interesting notes, right? Like, when we look at what is working for Airbnb,
Mm-hmm.
one of the things that they noted was that nights and experiences booked
Mm-hmm.
103.7 million. Long-term stays increased 25% year over year and 90% from Q2 2019. So interesting trend, and I don't know how long it will last, right? Is that this remote work?
I want to know how much
thing-
experiences is versus nights.
I
wish
do
they
too.
would
I wonder
break
if they
those
broke
numbers
that
out.
out.
I don't
Mhm.
think they do. That would be really cool to know that business. It's kind of like, remember Apple wouldn't share the services business until it
Right.
got to be significant. And then they started sharing it. They're like, oh no, we're a services business. We're not just hardware. But yeah, those long-term stays are juicy.
They are. I will that persist as a trend?
Yes.
I wonder. Yeah.
No, nomadic is going to persist for sure.
Yeah. Yeah.
I mean, other people have to go back to work, but not tech workers. Everybody else is going back to work. The tech workers seem to still have the upper hand. Now, with all these layoffs and rifts,
That's what I wonder.
I wonder how long
Mhm.
people are going to be able to, yeah.
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 Other interesting things to note, Airbnb is also preparing for a $2 billion share buyback to offset dilution from employee stock bonuses via Bloomberg, and then said, they said, quote, "We're so confident in our long-term growth and profitability that today we are announcing a $2 billion share repurchase program."
Oh, really?
Yeah. Yeah.
Wow. So they believe they're
Someone was
undervalued.
like, day trade?
Hmm. Well,
Yeah.
there's two ways to, this is my understanding. I'd like to get an education on this. You really have to dig into these buybacks, because some people,
Yeah.
I'm interested in your position on this, Molly. Some people say people do buybacks when they feel their shares are underpriced. And it's like, they think by buying them and reducing the total number of shares,
Mhm.
that's good for the company, well, for the shareholders of the company, which includes management and the public shareholders and employees and everybody. They can't find a better use for it. In other words, building more products, spending on marketing, not as good as buying your own share and reducing the share pool, which then should theoretically put the price up. Other people say it's manipulation and
Right.
you're just trying to make the stock price go up by getting rid of them. Now, for somebody like Apple, who just keeps printing money, yeah, doing share buybacks seems like a healthy thing to do. Because what else, they can't figure out what else to do with the money because it's just so much money sloshing around. I don't know if that's where Airbnb is. Do they have that much money sloshing around? But here's a very interesting chart, because we're talking about Uber versus Airbnb. Now, Airbnb is profitable and has free cash flow, and they have had for a little bit. Now, if you look at this is from Y Charts, thanks to the folks at Y Charts. They're not a sponsor yet, but they should be. I need a charting sponsor for J Trading.
Mhm.
PS ratio, price to sales ratio. So if you
Airbnb is
look,
purple, Uber is orange.
yeah, the purple is Airbnb. They were trading at 36 times at the peak of this madness, 36
Wow.
times their sales, not their earnings, Molly. This isn't a price earnings ratio.
Right. Sales.
And then, you look at Uber, it was much less, 2.7 times their sales. And maybe it got up to 10 or whatever. And this is the compression that happened in the market. But you'll see the two companies it started to narrow. Why? My theory on that would be because Uber now is taking free cash flow more seriously, they're going to try to get up to that Airbnb. And because, and Uber has that faster growth. So we'll see what happens. But there are price mismatches in the market on this price to sales. And I think Airbnb was a real darling. I think Coinbase was a real darling. And if you look at Coinbase's price to sales and Robinhood Robinhoods, and like they were also extraordinary. People were really pricing in a lot of growth,
Yeah.
and they've seen movies like Google and Facebook and Amazon, and Apple and Microsoft before that. When you see those movies and you think, well, one of these companies is going to be like those, or a couple of them will be like the next version of those trillion-dollar companies, that's when people get excited and maybe these things start getting a little out of whack. Or that's my theory on why people are making those bets. Would love to hear your feedback, Jason at calicanis.com for life.
Mm-hmm.
This is Robinhood and Coinbase price to sales over time.
Huh. Yeah. So you just see it's come way down. People were looking at those businesses as like they're never going to stop growing, right?
Right.
And they were up in the 20s. And then whoop, right back down, regression to the mean, 2.6 for Coinbase and 5 for, yeah. And then there was where they both got in sync, which is kind of interesting as well. And now people are giving Robinhood a slight edge on Coinbase, which makes sense given Coinbase's legal issues and, stocks are a more resilient market, let's say, than crypto. It makes total sense, right? So I like these pairings I'd like to start doing these pairings on Disney and my Warner Brothers Discovery and Netflix, right? Start to understand those, right? And this is what we're going to do here on the J Trading segments. But congratulations to Airbnb on having a kick-ass business, by the way. And Joe Gebbe is retired now. He left. So congrats to Joe on an incredible run. He actually came up with the idea. So great job.
Yeah. Yep. All right. And that's it for the news segment. Next up is the blueprint.
Oh,
and
am I doing the blueprint? Right.
Yep. Jason's going to cover part 4, which I cannot wait to listen to, having a bias for action.
Oh, very good. Okay.
Great.
Nobody
Molly,
stick with us.
You are good. Please.
Did you just dismiss Molly?
She's
Yeah,
good.
I'm out. I dismissed myself.
Okay, Maytrade.
But
Matriarch trades.
But first, I dropped some knowledge from Investopedia about buybacks. All right.
Where?
Peace out. Peace out,
Oh, I
peeps,
see
in
that,
our
yeah.
Slack. Yeah.
Okay.
Do you want to do the intro quick together or no?
Oh, yeah. Yeah, we can do the intro.
Okay.
Depends.
Oh,
I mean,
intro. Sure. Let's do it right now.
Okay.
Wait, I have to pull it up. Hold on. I just moved over to the blueprint in my Notion. Let me get back to and I'll take 2 questions from everybody. And we're at 61 thumbs up. If we get to 100, I'll give away an Ember mug, like Molly will show you right now, with the This Week in Startups logo on it.
I'm gonna have to get that
We're
one.
not giving away the This Week in
By the
Startups
way.
ones right now because those are going to take 6 months to come in. So
What?
Sending people, yeah.
No,
So
I can still give them to them. We'll give it to them. in
Stupid
6 months.
supply chains.
Yeah, but
We'll give them an option at
Most
something
people
else.
are asking for one tomorrow and not in 6 months.
All right. Well, what can we get for?
That's how people are.
100
All right,
bucks
let's do
maybe.
the intro.
I asked
Sure,
one guy, I'm
man.
like, do you want the white This Week in Startups one in 6 months or do you want the Amazon one tomorrow? He's like, Amazon, please. I'm like, okay.
What's the Amazon one?
Just on
like the
Amazon.
Oh,
one,
I don't want to
just
give
a
a
regular
generic.
old one.
Ugh, no. Okay, here we go. 3,
Wait, you don't want to
2.
give a generic Ember mug?
No, I want the one with the logo on it. The whole
Okay,
point.
okay,
Come on, here
okay,
we go.
come on,
3, 2.
All right, everybody, we have got a whopper of a show for you. If you thought that August vacation extended to the news, that vacation is over.
No,
So-
and then I'm going to do after the news, which we've got a lot of. I'm going to do part 4 of the blueprint, what it means to have a bias for action.
Everybody loves the blueprint, including me. It is so
Oh.
fantastic. First up, though, we're going to cover some earnings reports that came with some interesting announcements.
Yes, MicroStrategy's Michael Saylor is stepping down as CEO, going to become executive chairman. We're going to talk about what the plan is there for the Bitcoin holding company with some SaaS revenue, I guess.
The Bitcoin holdings did not perform that well in Q2, as you might imagine, down about $1 billion. So we'll cover that. And also Robinhood laying off almost a quarter of the company.
Yes, doing a RIF, not a layoff, reduction in force. We talk a little bit about what this means for the company and also the industry writ large. And then we're going to discuss Airbnb, which is down a bit, but they had a strong earnings beat. So we're a little confused there, but obviously an incredible company.
Yeah, still people are just doing the nomad thing in the Airbnbs. And then we wrap the news talking about a major player in the early stage startup ecosystem, Y Combinator, shrinking its cohort size by 40%, which is very, no, we did not wrap. Yeah.
Yeah. And why?
Thank you.
And why is
as soon
that?
as I was saying that, I was like, wait a second. All right. And then we're actually going to kick off the news with startup stories. Next up, actually talking about a major player in the early stage startup ecosystem, Y Combinator, shrinking its cohort size by 40%.
Why is that? Why would they do that now? we have 5 or 6 theories. We're going to go through each one of them, and then we'll wrap with my blueprint. It's going to be a great show.
Yeah, stick with us.
And Molly, before you stop your quick time, can you just say that line right underneath it, that intro?
Yes. So Airbnb slightly missed on estimates for revenue, and then shares were down as much as 9% in after-hours trading on Tuesday, despite huge profits.
Perfect. Thank you.
You're welcome.
Right, take care, Mom.
Acting.
Look at this. 321 of you are here. Wow,
I
this is
know.
great.
All right,
Striving for the
see
blueprint.
you in the meeting.
Yeah,
See
maybe
you
the blueprint.
tomorrow.
Yeah, blueprint. Okay.
Enjoy.
All
you,
right.
Molly.
See you later. I need a salad. I didn't eat bread. It's my 6th day of working out in a row, everybody. 6 days in a row. I'm really getting my health front and center. 6 days in a row.
So you're off the stimulants and the Adderall, and you're on to healthy exercise and eating salads.
Do you think I need stimulants? I mean, come on. You want to see me on Adderall? I don't think anybody needs to see that.
definitely
My
not.
energy level's too high.
No.
What's the working out's actually been doing for me, it's actually making me go to bed easier,
That's great.
which has been great. And I've been drinking a lot more water.
Yeah, it's good to feel sore too. It's one of the best feelings in the world.
I have been feeling sore, and
That's good.
I would do my tonal weights, then 2 days of Peloton, then tonal weights. So it's but I want to get to 2 a days. So I want to do tonal every other day, and then every day go on the Peloton, and then I got to try to get on the hydro again. But my arms are too sore for the hydro.
Can you restart your quick time if you haven't already?
I will. So let me save the news.
Have you seen the Peloton for punching, the Peloton punching bag?
I did.
They call themselves like the Peloton for like
boxing.
Yeah, heavy bag. Yeah.
I would like to get that now that everybody wants to fight me. Guys, I know I'm punchable, but enough. I want to have Skrelly on the program, by the way. I think it'd be a fascinating interview.
Skrelly? Yeah,
I think reach out to Martin. I think it'd be fun.
He has a new Twitter handle. It's like Enrique something. He's calling himself Enrique on Twitter.
He did a whole video, keeps coming up and suggested for me about learning Spanish in prison. But I think it'd be a good, interesting interview because he's also publicly trading now, and he's doing these like long 6-hour videos of himself trading.
An interesting interview.
Well, he's like he's got people watching his desktop, and it's really fascinating. Actually, I think it's pretty cool. I watched like 10 minutes of it. It was a little bit boring because he just sits there for 6 hours and builds a spreadsheet. And he was comparing Google to Microsoft and how long it took Google to get to a certain amount of revenue versus Microsoft, yada, yada. And he's just like doing like really fundamental analysis of stuff, which I kind of appreciate. Even though he's
clearly a very, very sharp person.
Yeah.
But he's just
maybe on the spectrum.
Yeah, maybe.
Yeah, maybe.
I'm not a doctor.
These are make your own trade decisions. Make your own decisions about SSRIs. I can't make these decisions for you. If you want to fuck with your brain and put some SSRIs in, that's on you. Enrique Hernandez is what he's calling himself.
Yeah. It is Enrique. Yeah, I was right.
No, this is not him.
Yeah.
Why is he doing this?
Because he's Martin Shkreli. He's nuts.
But that picture's not him.
I know. It's a joke.
Oh my God. He's a madman. Oh, he's messed up. Okay. On the subway, he's messed up. All right, here we go. 3,
wait.
2.
Quick time is going.
No, it's not. Thank you.
Okay.
Good job. All right. Now I'm at 3 seconds. Just gonna close a couple of windows here. I'm really excited for this one of the blueprint. I think I might only do the first section because I did so much more on cognitive.
I see. You put the philosophy.
A lot. Yeah.
You should cover. You don't have to do the employee one, but you should definitely talk about product velocity because that rolls into it so perfect.
Okay, perfect. 3, 2. Hey everybody! It's time for part 4 of my 10-part miniseries we're calling The Blueprint. What is the blueprint? Well, it's how to have a great career. That's all it is. It's just career advice for you. If you're listening to this podcast this week in startups, you are probably want to be an entrepreneur, capital allocator, and you probably want to be successful in your career. So this is not just based on like what I learned in my career. My career's gone okay. I also have been recording This Week in Startups for 1,500 episodes. I've done conferences. I was a journalist, and a lot of my friends are way more successful than me. In fact, my friends tend to be some of the most successful people on the planet. Therefore, I've watched firsthand how people become successful. And this part 4 today might wind up being the most important one you ever here. In fact, this could be the 10 minutes of your life that changes everything for you, because there is a segment of people who need to hear this. Now, in part 1, we did branding yourself with a breakout skill. Critically important. Part 2, we did when to quit your job. Part 3, I did building and leveraging a network. That one got a lot of great feedback. But today, I'm going to talk to you about creating versus waiting, also known as having a bias for action. And really, we'll title this episode, The Benefits of a Bias for Action. I think that's really what this is about. Now, you've probably heard this term, a bias for action, okay? This is having an emphasis on the need to take action. Now, you can daydream about your life and having a better job. I did that when I was on the train going into Manhattan, thinking about my career. But the people who actually take action and create something in the world are the ones who generate massive wealth, change the world, and become legendary, right? So let's get right into it. The framework I want to talk to you about was codified by Amazon. It didn't originate with Amazon, but Amazon is some of the most thoughtful individuals in terms of thinking about thinking. This is called cognitive or meta, right? Cognitive, like cognition thinking. So there are cognitive frameworks, cognitive biases. The way people look at the world and the way they think really does matter. Now, I'm not talking about manifesting or some, alternative nonsense like that. What I'm talking about is the principle of taking action. Now, you've heard about Amazon's 16 leadership principles. These are the things that they will reflect on when they're having a discussion or a debate where they're trying to make a decision. Customer obsession, ownership, invest and simplify, learn and be curious, hire and develop the best. You can read about these things, but buried in there is a bias for action. And they describe it as speed matters in business. And sometimes people will not say a bias for action when they describe this. They'll just say product velocity, speed matters. You'll hear these terms amongst the entrepreneur and capital allocator class. Why do you keep hearing this? Well, because we see it every day. We see the companies that are frozen and don't make decisions and don't take action die. And the people who are stagnant and don't make decisions, they die. And what you realize is people have inherently a bias to do nothing. They have a bias to freeze. There's many theories on why this is. You see a predator, you don't make a decision, or making no decision is better than making a decision. We'll get into that in a minute. But in business and in your career, you need to understand that speed matters and that many decisions and actions are actually reversible and don't need extensive study. Now, there are some like, what college am I going to go to? Okay, this seems like, oh my God, this is the craziest decision. Or what career should I pick? The truth is, some people will spend so much time thinking about what career, they'll never actually start a career. They'll never actually take a job. So they'll sit there making, lattes while they try different, night courses, or they read books, but they never actually go take a job. It would be better to just go take the sales job, go take the product management job, the PR job, whatever job it is, and just get a feel for what those are. And if you love them, keep going. And if not, you can reverse them. And you want to really create value by calculated risk-taking. The risks that you take are the ones that create the value. So just keep that in your mind as we talk about this. So Amazon breaks down these 3 points to create buy-in, right? So when they explain the why, they give factual insights. Speed matters in business. Okay, great. Then they try to teach a lesson or educate you. Many actions are reversible. You don't need extensive study. And then finally, Amazon creates a value, a principle. We value calculated risk-taking. So that's how they will explain this to you, right? Speed matters. Okay, I got it. Many decisions are reversible. You don't need to study it. You don't need to overthink it. Great. Okay, that makes sense as well. And then they create a value inside their company. So when you're working on your company or yourself, you should have some value system. And you might have heard Michael Jordan say, hey, you miss 100% of shots you don't take, or I miss more shots than anybody in the history of the NBA, yada, yada. That's calculated risk-taking thinking. The BFA, bias for action, is related to other cognitive biases. The status quo bias has existed for a long time. And it basically says, new ideas are not that much different than existing ones. People would feel safer to just very modestly increment what happened previously. I saw this firsthand when newspapers were looking at the internet. You know what they did? They took the design of a newspaper and they put it on websites. I kid you not. And so they would show you a front page and you would move your mouse around with a magnifying glass to read it. And then in a story, it would say continued on page 26. You click it and it would make a motion and an animation of the newspaper flipping 26 pages. And you're like, well, you could have just let people scroll to the end of the story. You don't need to use a jump, right? That's this status quo bias. When people made the first cars, with an ICE engine, they looked exactly like the ones with horses. They just got rid of the horses and people were sitting on the hoods of the cars. And you're like, wait, this makes no sense. Again, this incrementalism, the status quo bias. People will stick to what they already know. They don't want to make a radical change. But the businesses that really break out really do make radical changes, as opposed to this incrementalism, which equals a slow death. There's also the sunken cost fallacy. Now, if you have been doing something over and over again for a long time, like your startup, is invested in this tech project or this certain customer base, or you invested in a stock, or you're investing in private companies and you keep doing bridge rounds, you will look at the money you've put into this and the time, the effort, and you won't want to make a change because you've got this sunken cost. Whereas somebody else will come along and say, well, I don't have a sunken cost. I'm just going to start a new company with this better idea. And often these two, when they're combined together, create this real lock-in inside an organization and inside a person who's trying to build their career. I'm a journalist, I can't be an investor. Oh, I'm a journalist, I can't be an entrepreneur. When I looked at it, I was like, well, I'm an IT person. Why can't I be a journalist? I know about this tech. And am I a journalist now? Why can't I be an investor or a company creator? I didn't actually have the sunken cost fallacy or the status quo bias. I was just thinking I could do anything. Why not? Why not me was what I always asked myself. Somebody has to figure this out. Why not me? And you have to break these cognitive biases that get cemented over time. There's also the confirmation bias. Okay. And the confirmation bias is that you seek out facts that confirm your existing belief. So you're like, well, this is how newspapers have always worked. That's why they have to work this way on the web. This is how e-commerce always worked. This is how transportation always worked. This is how trading stocks always work. Of course, you have to pay a fee. We can't have free trades. And then somebody will break the mold and then they will go much further in their careers and their companies. Their products will be more innovative. And you can always, again, back to Amazon's point, you can always reverse bad decisions. There's very few decisions that have the risk of ruin. If your decision is, I want to climb mountains like Alex Honnold without a rope, okay, that's a stupid decision. All due respect to Alex and his tremendous talent. It's still a stupid decision because we could be sitting here just as easily and never even know the name Alex Honnold because he could have died the first time he tried to climb a mountain without a rope because he put his hand on some bird poop and slipped off. Like, that's how bad that decision was because of the risk of ruin. Now, there's also a theory called norm theory. What norm theory states, and this was actually a paper by Daniel Kahneman in the 80s, and this is where a lot of this got started, is that making no decision sometimes is the optimal decision. And they did a study of goalies. It turned out a lot of goalies would be best served sitting in the middle of the goal and not jumping either way until the ball got struck. But they would try to figure out which way the ball was going to go when the person was running to the ball to kick it, and they would jump a certain direction. They had this bias towards action. Now, why did they have that? Well, it turns out if you do nothing, sometimes that's an optimal theory, but other times you may not like living with the results of what your behavior was. So if you did nothing and the ball went past you, everybody's going to look at you and go, hey, schmuck, you did nothing, right? You just sat there and did nothing. So goalies just picked a direction. They kind of jumped out. They made their best guess at it. Statistically, that was a bias that people had to get over. But then there's other times where people do not take a chance. And this is where startups are different. They didn't take a product chance. They didn't take a chance to go after a new customer, to change the name of their company, to change their business model, to go from business to business to consumer or consumer to business to business. They didn't make a change because they thought, okay, if I make that change and it's audacious and I fail, can I live with everybody laughing at me, essentially? Can I live with the stigma of having made this change? And you know what? Yeah, you grow up in Brooklyn and you say, hey, I want to start my own magazine. People laughed at me. I said I wanted to be a black belt. I wanted to run a marathon. I had people laugh at me. I had people in my own family laugh at me. Like, you will get this from the people around you, and it can put into your brain this risk-taking aversion, where you say, you know what? If I take that risk and I fail, man, I'm going to look really bad. It's better I just stay in my lane. I'll do X, whatever the safe thing to do is. And so being just aware that norm theory exists could change your entire way of going out in the world. And the way I would look at this is, if you're an attorney and you decided to be a venture capitalist, I've talked to attorneys who want to be venture capitalists. If it doesn't work, do you think you're going to still need startup lawyers in the world to be able to get another job? They're like, absolutely. I'm like, well, then why wouldn't you try? And they're like, I'm not sure if I'll, they don't even actually know why they're not trying. But the real reason is they're afraid they're going to fail. And no gamble, no future. This bias for action comes from the Marine Corps. They develop a bias for action, and they define it as a combination of willingness to take initiative, act boldly, and accept risk. This is long before Amazon, made this part of their operating philosophy. And the value of this cannot be overstated in wartime. And I'm just going to read you a little bit about this. The 27th commandment of the Marine Corps General Robert H. Barrow spoke to a group. The 27th commandant of the Marine Corps, General Robert H. Barrow, spoke to a group of soon-to-be commissioned officers and emphasized individual audacity as the key to future success. He defined audacity as boldness of thought and action, which often contradicts established wisdom. Institutionalized audacity at the individual level can be attributed to the successes of the Marines at such places as Tarawa, the Israeli army, the tactical success of the German army in World War II, yada, yada, yada. This success require the typical second lieutenant remains at risk. And this is what he said. We must cultivate the audacity to conceive bold strikes and the guts to carry them out. The more opportunity that can be provided to develop a bias for action and the less barriers to bold thoughts and action, the more successful officers we will breed. Therefore, developing our habit of thought is just as important as developing our technical proficiency. In other words, the Marines train people who are on the ground to make these decisions in real time and make audacious ones and have a bias for action because it wins wars. Full stop. And the people who get frozen, like that goalie, in that situation, not moving might be the better one. So I'm sure there are situations where the Marines sitting tight might be the right decision. But a bias towards action and making bold decisions is what typically wins wars, not sitting back and doing nothing. And that's why in startups, we look for that. That's why people like Reid Hoffman have said, like, if you're not embarrassed by your first version, you waited too long to release it. You really have to get the ball moving. And what a bias for action does is it also will bring more people to rally behind you. People want to see people with a bias towards action succeed in the world. They're attracted to it. There's nothing attractive about somebody who just sits there and, does year 9, 10, 11, 12, 13, 15, 20 of this career where they're not growing. Nobody's really throwing parties or writing stories about that person. They're writing stories and they're backing, more importantly, giving money to and going to work for people who take those bold actions, right? And the bold actions win the wars, whether it's in startups or in actual real life. And this is where the second framework comes in. This is where you can really apply it if you're at a startup, is product velocity. We meet a lot of people with ideas. We meet too many people with ideas. The ideas mean zero. They do not change the world. And a great idea can change the world if somebody executes on it. You need to actually build or create something. So you have to stop waiting and you just have to build something. And if you're in a position to quit your current job and go build something, or you want to do it on your weekend, watch Blueprint number 1 and 2 if you're not sure. Watch Blueprint 1 and 2 if you aren't sure. But I talk about like, sort of frameworks for when you should actually quit, or how to move on to your next idea while you still have your existing job if you need to make money. But really, one of the key metrics my team evaluates when we're looking at investing in something is, how has the product changed since we first met this entrepreneur? What's changed? And so, if you've got investors using a test flight app, if they see you sending an email with new features and they see the app getting updated, and in the notes you explain what's being updated, it becomes addicting to people. The change log becomes how people make their decision to invest. And so you really want to have a simple product, of course, but you want to keep iterating on it. Now, you don't want to have ADD. Founder ADD can kill a company. That's when you're like, I'm building this product, it's working, I'm getting some traction, I'm iterating on it. But, then you decide I don't know, want to start a podcast, or you want to travel the world and go to conferences or start a nonprofit. The people who investors invest in are people who are iterating on that same product over and over and over again, and getting in front of as many customers as possible and pushing that rock up the hill. Sure, you want to gather feedback, that's fine. But remember, there's another statement we say all the time: done is better than perfect, or don't let perfection be the enemy of progress. The speed is much better than perfect when it comes to the competition to build great companies. You want to build, you want to talk to customers, you want to iterate. Of course, if you make too many features, you can delete old ones, right? They can become a distraction. They can become what's called technical debt in our industry. You have to keep up with them. So don't be afraid to kill something that's not working. That is also a bias to action. A bias to action is saying, this isn't working, we're going to stop it. A bias to action, hey, we're going to go do this. And that's basically a philosophy you want to have. A body in motion stays in motion, as Newton said. Startup in motion stays in motion. You need to build a culture of constantly building stuff and innovating. If you listen to this podcast, This Week in Startups, you see I'm constantly trying new ideas, like the Blueprint, like VC Sunday School, like J Trading. I want to try different things, see what sticks, what connects with an audience. All in Podcast was but one example of that. The conferences we've started, Remote Demo Day. I'm constantly trying new ideas. Some stick, some don't. We can deprecate others, and we can build others up and double down on them. I hope this has been helpful for you. And think about, what risks you're taking and what biases you have, and maybe what's keeping you from taking that big leap or that jump, or going after a bold idea, or canceling your last idea, shutting it down and moving on to the next big idea. A bias first action is absolutely essential if you want to have an epic life and you want to do great things in the world. So I hope this has been helpful. If you have a friend who maybe is a little stagnant, you can send them this clip. Maybe it helps them shake something loose and go on and be the best version of themselves. All right. Thanks for tuning in to The Blueprint.
Great.
It's a little long. You probably cut something out of that. Save. What does everybody in the chat think of that? The Blueprint.
I'll read you some comments.
This
is Jake Hal at his best.
Whoa.
I won't read you the second part of that comment.
Talking about himself.
No, the J Trade / political stuff is nonsense.
Oh, that's fine. I don't want to talk about politics. I mean, literally.
Neither do I. Sachs
keeps baiting me into this like constant political stuff, and I'm like, I really don't want to talk about like how much you hate Biden, and I don't want to be like on this constant red pill train with him.
Yeah.
If you look objectively based on your wins, aka Uber investment, you'd think angel dinners would still be a thing. I'm going to start doing more in-person stuff for sure. Definitely going to start doing, like we did Remote Demo Day as like open angel.
Don't you feel that the angel ecosystem has grown so massively that it's like, how could you even do a dinner with like Ron Conway and Cyan Bannister? Like, it's not.
No,
even
it was
possible.
like 10 of us at the time.
Yeah,
now it's
how
crazy.
Now it's like maybe 1 million people in the United States. Maybe not 1 million, but
not a million, but it's tens of thousands of people.
Yeah.
I mean, we have 11,000 in ours, so yeah, it's tens of thousands for sure. Yeah.
All right.
Okay.
Do you want to give someone a mug? We only have 92 upvotes, but there we go.
Give us 8 more upvotes, and I'll send somebody a mug or a bottle. I can't do that. What? Oh, I'll send you $100 in liquid IV.
Geek on 2 wheels commented, "Be best."
Be best.
From
Be
River.
best. Oh no, please. I actually think Trump's going to run again. It's literally
Oh no,
going to
Be Best
destroy.
is not Rivka. Be Best is Melania.
It's like
right?
Rivka.
Yeah.
It's right. It's
Melania,
Melania.
yeah.
It's basically,
Yes.
they're the same
That,
person.
that was peak NFT, I think, when she did that.
But
with
she bought her
voice.
own NFT.
Yeah.
Yeah. All right, there we go. 96. Okay, so tell me, what is your favorite Marty Scorsese or Leonardo DiCaprio film? And we'll pick, and why. And we'll pick somebody to get $100 gift card when we hit 100.
When you
thumbs
started
up.
with Mar, I thought you were going to say was your favorite Martin Shkreli like controversy or something, and I was going to be like, wow, that's really funny.
Oh yeah, no.
switched it up.
I mean, what would it be? Fleecing people
Yeah.
of their drugs,
I like when
trolling
he
everybody with the
bought
Wu-Tang
the
album.
Wu-Tang album. Yeah, that was awesome.
That's pretty next level.
Yeah.
Was he like, I'm gonna burn it or something?
That
Oh,
was
Nick's
like,
Fan TV here. Salute. Where can
That
I
was
find the
like
other
Ken
parts of
Griffin
this
buying
discussion?
the
Nick's Fan TV.
the
Just you
Constitution
can
DAO.
go backwards in the, you know how YouTube works. You can just go backwards. Oh, if we talk about the blueprint, I think that we're going to make a playlist for the blueprint.
Yeah.
Actually, we should just do
I'll
this
do
week in
that right
startup
now.
stock and just do this week in startups.com/the blueprint
Mhm.
to forward people to the blueprint. 97 thumbs up. Give a thumbs up for your squad, and we'll give away a $100 liquid IV to somebody who their favorite Martin Scorsese film.
My favorite Martin Shkreli controversy.
Favorite Martin Shkreli controversy or your favorite. It's so crazy.
Oh, that's funny.
All right, Noties, I gotta go. Pick somebody here.
I don't know.
Doesn't matter to me. Oh, there we are at 100. Perfect. Okay, we got our 100 thumbs up. Now I really want to see what's going on with this Alex Jones.
All right, I got it.
Okay. All right, everybody. Talk to you Noties later. Bye. Okay.